Well, hello class. This is part D, the last of the series in personal credit, and we're going to talk to you a little bit more about your personal credit. Understand your credit rating of the Fair Credit Reporting Act. Basically, it's a credit reporting system that reports to these three credit bureaus about your history of how well you did as a creditor. You have your history in there of from everything that you borrowed, loan back, also any kind of bills you did not pay. So doctor bills will go on there that you didn't pay, hospital bills, any kind of bill that didn't pay, they can report you to the credit bureau, so that sooner or later it catches up with you. When you want to apply for a loan, they say, well, you've got these outstanding debts and we don't loan money to you because of that, and it affects your credit score as well. So understand that in dealing with the credit scores, you have these three agencies that deal, they're national credit reporting agencies that keep records of all consumers. Okay, and with this, that you understand, they work with lenders, creditors, insurers, and the employers to update and distribute information to the right institutions. So you're kind of being recorded in everything you do as far as related to your credit score. So your credit report goes into six main sections. And the one is your personal information. It has your address or all the addresses your name's at, and this is something you should always check with your credit score, because sometimes you may be appearing on some address that you're not, which could tell you that maybe someone's using your credit score. And that's something you always double check and make sure you're correct. Make sure your birthday is correct. Make sure all the employment information is correct as well. You have your consumer summary of all of the accounts you've done as a consumer. You look at your account histories, and it tells you if you had what credit cards you had open for how long. If you had JCPenney's credit card, it shows that you had it open. You may not have any balance on it, but it says it's there and it's open for so much. Your public record, if you had a bankruptcy or anything of that nature, will go on there too as well. Any kind of inquiries, which means every time a store or anybody asks about your credit rating, they'll go up there. Something you should keep in mind about that, these stores you go into, because you get 10 or 20% off when you apply for a credit card, and you probably, and maybe the chances are you get denied for it. Well, every time an inquiry goes in, it will affect your score from anywhere from 5 to 20%. Points drop you down that many points for every time that you have an inquiry. So you got to be careful about when you say, yeah, I want 20% or I want 10%. It's going to affect your credit score when you do that. And also creditor tax too as well. It'll tell you about if you have anything outstanding. It'll give you the name and the person that's involved that you still owe money to, or that you still have, positive or negative anyway. So if you open up a new account and you miss a payment or move, these sections are then updated with new information. Some places report you yearly, some by the month, some every 6 months. It depends on how they have what they do on their reporting as far as that concern. And so, old negative records will stay on your credit report for up to 7 to 10 years. So, for example, you file bankruptcy, and that can stay in your record for 7 to 10 years, depending what kind of bankruptcy you filed. Anything that you didn't pay off, you got a car repossessed or anything of that nature, that stays on your credit score for up to 10 years. So those things you have to keep in mind that affects your credit scores. Now, the United States Congress just passed that made it possible for every 12 months each person entitled to one free credit report from each of the three nationwide consumer credit reporting companies. So once a year, and you make this up yourself, and I suggest either do it at tax time or your birthday, so that every year. Get that free credit report, go through it, make sure everything's on there correct, and take care of the business like it's supposed to be, so you have a good idea what your credit rating is, what the score is, and all that. Then shred the information. Don't keep that information around. You don't want to have that hanging around the wrong people, because then they can use that information, and they can, and the wrong people could use that information to set up a new identity for themselves. So you want to make sure you shred that report. So how do you improve your credit score? Well, first thing, be on time. Make sure all your payments are on time. That's the bottom thing, that they're looking for someone that does not, shirk their responsibilities. They make sure their payments there on time or early, or they pay their loan off early. They love those kind of people. And, check your credit reports all the time. Like I said, a minimum once a year. I like to do mine at least twice a year, just because I always want to keep track of those things, because I travel so much, and because I use my cards in different various areas and out of the country especially. I want to make sure no one got a hold of that and use that information by stealing my identity either. So you want to keep track of those, and this is a good way to keep track of what's been used. Manage your debts. We talked to you earlier about the debt to income ratio that you should always use to make sure you manage your debt correctly. You want to make sure you keep your credit cards accounts balances below 35% of the credit. That gives you good reporting. If you max out your credit reports all the time, or your credit cards all the time, then what happens is that you're not going to get a really good rating. And so the idea that if you keep a balance below that 35% of whatever it is may be, you're doing good. So if you had a credit card worth $1,000 minimum, you should keep it below $350. That gives you a good credit rating report when it turns your information in monthly or every quarter, depending on when they do it. Your credit card does that. Give yourself time. Time is the most important factor that can improve your credit, but that means that you got to make sure you take care of paying off your bills a long period of time. Make sure you're credit responsible. Make sure you keep your accounts up to date, and make sure that there is no negative that is put on that report. So avoid these inquiries. So large number of inquiries comes in a short period of time. This drops your credit score. And like I told you before, remember that every time you go to these stores, they want you to sign up for their credit card, and you sign it every time they inquire, and you may not get it and say denied because your credit wasn't good enough or whatever. It drops your score about anywhere from 5 to 20 points. And so that's something you have to realize too as well. And the great thing about technology advancements, you now have the ability to go to different sites, and I just put this particular site as an example at Arizona Federal Credit Union. They have an educational center. Most banks, any kind of institution that loans money, have these educational centers that helps you learn about credit and everything that needs to know about credit to help you manage your credit better. It also has financial calculators there, so you can calculate your different types of scenarios when you're dealing with that. And plus you can bank online, and everything is in one place. So anymore, it's very important that you use these advancements to help you maintain a proper and strong credit rating. And that's the end of this series on the LM7 series, dealing with your credit. And we will see you again when we start the next one. Thanks a lot.